Lahontan Gold owns something special in Nevada, a mine that already produced 350,000 ounces of gold between 1988 and 94. When operations were shut down back then, about just 2 million ounces were left still in the ground. While lots of other explorers are searching for their first ounce, Lahontan knows where the prize is. Located in the Walker Lane mining district of Nevada, they're restarting a proven past producer, not exploring for a maybe. Kimberly Ann, CEO, is here to tell us a lot more about their path to reproduction. So maybe, Kimberly Ann, we can start with this. Why did the mine shut down back then?
Yeah, it's such a great question. I get that question all the time. I mean, as we all know, the economics of mines change throughout the years. Cash costs go up and down, gold prices, et cetera, et cetera. Now we're looking at a booming gold market. Back in the day when the mine was shut down, gold was at $340, and they just couldn't make any money at that point. They started in '88, and it was a whole $380 an ounce, and they were making money. So, it was a great operation. Corona Gold did a fantastic job. They just left so much gold and silver for us, as you beautifully said it, a beautiful prize for us to explore and move forward. So we're very excited and honored to have this asset, actually.
Well, tell us about what's been in the works lately for the company to, again, go toward that path to reproducing it.
Yeah. So we put out an updated resource back in October, just under 2 million ounces, really good grade, 0.93 gold EQ. It is the second highest grade for an open pit mine in Nevada, so that's really fantastic. We put out a PEA in December showing very low cash costs, great IRRs, etc. And now our focus is on, we just finished the financing, so we're going back to the drill rig, adding more ounces, but also bringing our pit shells down, just upgrading the quality of the PEA for the market to see, and really identifying how long will the mine life be for the project, etc. It's just a lot of fine tuning, and it's going to be really exciting next 6 months for people to be paying attention, because our share price is at a very good deal right now, and it's going to continue to go up from here, I believe, because it just has to, given the news flow coming.
Yeah, I mean, in preparation for this interview, I've watched you speak quite a bit about this company, expanding awareness of the story, and you say, the shares are on sale. So what merits do you have, the team have, this asset have, that make us think, okay, this is a great buy?
Well, I mean, when I invest in mining stocks, my advice to people always is, make your checklist of things that make you feel comfortable as an investor. For me, it's team, locality, metal, whatever metals you're interested in. And we have all those things. Infrastructure, do you have issues with First Nations or things like that will hold up permitting? And this is why I look at Santa Fe and I get giddy when I think about how fantastic this asset is, because as a past producer, we have so much infrastructure in place. What I mean by that is we have road access, we have 3 wells on the property. Most people don't have water rights in Nevada. We have all the water rights. In fact, we have more than double than what we need right now. We monitor those wells on a quarterly basis for the past 35 years to check for cyanide, things like that, with a perfect record. And that's going on because it's a mine under closure, so we have to treat it as such. And then we have a substation on our property. I don't know very many companies that can say that they have a substation on their property, of which was put in back in 1988 when they built the mine. So how beautiful that is for us to have on our property, which means very low cost, a lot of questions answered, which means our CapEx is low. It all adds up to a perfect storm for going back into production.
And of course, de-risking any mining project is key and on top of mind for management teams. What are the biggest risks that you face right now? And what are you doing to de-risk?
Yeah, so I mean that's always the question of the day. I will admit full forward here, I am a control freak. I like to control everything in my life, and the one thing in mining, as we all know, we can't control is the permitting process. That being said, since the Trump administration came in, we've seen completely different turnaround in our local offices at the BLM, which has been extremely exciting, meaning they brought down two people from the state level working in the offices that know exactly what's going on with the new legislation. They've just put in more legislation last week demanding the BLM, Bureau of Land Management, to be coming back to companies in 28 days versus 12 months. So they're really putting them on notice. We get to have biweekly calls with the BLM, which is unheard of. So we're very encouraged what we're seeing. I mean, we're on point for breaking ground in early 2027. But everything that keeps coming down the pipeline right now, we're hoping that pushes it into possibly 2026. But even still, if it's early 2027, that's a darn good target to be hitting right now. And as far as more de-risking on the ground, look, our capex right now in our PEA is 135 million. That's with the 20% contingency, so it's more about 110. That's not a lot of money to find. We don't have, and the reason for that is because we have pits there. We can see competent rock. We don't have to hire engineers to drill holes to see what degree our pit walls need to be. So a lot of questions you have to ask in a greenfield project have been answered. So I don't believe in wasting dollars doing more studies to look at the same information when you're looking at a project that has been sitting there for 35 years in perfect condition. So, a lot of questions that people have are already answered. And that's why I always encourage people to go to our website, as you were speaking of. You see a lot of fantastic videos, drone footage. You can see the whole property. There's no First Nations. It's the driest place in Nevada, meaning no one lived there. So you're not, disrupting neighborhoods and things like that.
What else are you doing to make sure that you're managing finances as smartly as possible?
Well, that's always a good question. So my background is business and finance, and I always believe I can hire my team, my technical team, to work smart together. But that doesn't mean they have to work in-house. That doesn't mean I need a COO right now. Next year when we're looking at building it, yes, of course we'll have someone in-house. But right now I have fantastic consultants that I can control the spend. They're great. They're the top-notch people. We have respect and Capus Cassidy, and our permitting team is top-notch. So all those people, again, if we choose to, we can say, stop. We don't have the money to do this, and we control that. I can't really do that when I have an employee in-house that has a family and all these type of things. These guys have other clients to work with. And our team on the ground is very knowledgeable, down to, look, Brian, my VP of exploration, the drill rig's coming out. We do need 2 people around the clock to be watching the rig. Guess what? He's going to go watch the rig because I have to be at conferences. So we do a lot of dividing and conquering on our team. I think of them as family. I think that we all win together or we all lose together. So we're a tight knit group, and I think when everybody feels respected and honored at what they're doing as their job on the ground, then there's no way you don't have success that way, because that's, to me, the right path.
Well, thank you, Kimberly Ann. I think I want to leave it with this, a more wide industry question. The junior space is not really there yet with hitting with investors, but it will happen. That's my belief, and I believe your belief. What's the holdoff? And when maybe would you say we could get there?
That's such a good question. I was just at the Mel's Investor Forum last weekend, and we're all on a panel together saying the same thing, asking the same questions. I mean, we're seeing it hit the junior and the big dogs. But again, you wake up every morning with something new with Trump, whether it's the tariffs or him pulling back on the tariffs and all these things going on. So it's a really dynamic place we're in right now, and it's pretty fearful. I think within the next 4 to 6 months, we're going to see a trickle down to juniors, because at the end of the day, the majors are making so much money off just the gold, metal prices alone, and people are going to want to be buying something else, and it has to go to the junior space, whether it's those guys investing in us or just down to the retail, everyday shareholder. So I do think it's going to happen sooner than later. The holdup has been quite surprising, I think, for every analyst I've even talked to this year on this, but we all think it's imminent, and that's why my best advice I think I give people is, look, if you really like this space, then you should start buying up every small, small cap company right now because they're not getting any cheaper. And 6 months from now, you're going to be pinching yourself for that. So I think it's coming, but again, we're still that high risk part of the industry. I'm not considered an exploration company. I'm considered a development and exploration company. And there's lots more ounces to find. But, the pure exploration companies are going to be waiting for a hot minute, but we'll see. Who knows? I wish my crystal ball would work.
Right?
Yeah,
Well,
then we'd
Kimberly
all be
Ann,
wealthy.
exactly. Well, Kimberly Ann, thank you for being here, and I hope to see you again.
Thank you. It was a pleasure. Take care.